Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I am Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's our telephone number. Pick up the phone and give us a call. We'll talk about your mortgage. Talk about your mortgage rate. By the way, rates. Woof. You seen them? It's the highest they've been in 7 years. If you're looking around trying to get a mortgage right now and you're thinking, oh my gosh, these rates, just remember, when I first got my mortgage, the lowest rate I could have got was 8.75%. We're way away from that. And that was a good deal at the time. However, I understand if you wanted a 3.5% rate and now you're forced to get at least 4.5% to 5% in your rate. Yes, I understand. But rates are still pretty good even though they're going up. And they're going to continue to go up. And as I just said, 7-year high on rates. So if you're out there and you're shopping around, look at the housing market. In the housing market in your area, guess what? There's probably a lot of opportunities today, at least more opportunities today to buy at a price more friendly to you than there was 5 months ago. Why do I say that? Because the inventory has risen. Prices have really flattened out in a lot of places in San Bernardino and Riverside. And by the way, hello everybody out there. It's nice that you're listening. Thanks for driving around on the weekend, tuning us in as we talk each and every week about what's going on in your area, about the area next door and across the country. The actual reach of the show is to KCAA, KMET, and K-Tahoe, our friends up in Tahoe. Hello, everybody up there. We are starting to get some traction on the information that we're providing to you about your mortgage in that area. So we're getting calls and emails and requests of information. Sometimes we have guests on the show who you want to be able to talk to off air, not necessarily on air. If you do call the number 888-713-2929, you can actually get me to tell you how to get in touch with these other people. If you want to, go to KCAA or KMET, to those radio stations' websites, you can actually see this show, this video of this show, where the guests will have their name and number underneath them as the camera reflects me talking to you via the airwaves on the microphone. So if you're, like I say, in need of trying to find out who you want to talk to, one of the guests on the show, you can do that. Also, we're on YouTube, by the way. YouTube is one of our best ways that we can get our information out. And YouTube is producing movies. Daryl, did you see this? YouTube is going to get into, obviously, the production area of and first run stuff. And it's pretty amazing the reach that this company has worldwide.
Yeah, they're going to do some original stuff, and iTunes is as well as TuneIn Radio.
Another thing, not Twitter, Instagram. Instagram also has a live feed, which I did not know about.
I was not aware of that, but I'll know more about it when we talk next.
Yeah, and exactly. Twitter, Facebook, and there's another one, not Pinterest. I forget what it is. But certainly on Instagram, there are a lot of different channels out there trying to vie for space in terms of grabbing your attention. So when you look around and you're trying to figure out where your entertainment dollars are coming from, where they're best spent, spend some time figuring it out, because there's no reason to pay a cable bill. There's no reason to pay high satellite bills unless you absolutely have to have that fare. But I have satellite. It costs, a lot of money, $150 a month. But there are, 500 channels, let's say. I don't watch but 50 tops, right? And I surf around. There's a whole 200 section on the satellite that has, all the shows that you and I watch, Daryl, the Fix
Breaking
It, Flip.
Bad and Flip It,
those
or
two.
Flip It or Fix It. Or,
Fix It or Flip It, the $1 Million Listing, all that kind of stuff.
Love It or Leave It.
Oh, yeah, I like that one, too. Who's that star you were telling me?
Yeah, I don't know the names of the two people there, but
Right.
It's Love It or List It, and it's two people. One realtor fixes up the house for the people to stay, and the other realtor finds them a place to move, and they have to decide at the end which one to do.
Right, Fix or Flip. It's a
Yeah.
pretty good show. But anyway, a lot of these programming things really are affecting, like let's say you are looking for a mortgage and you want to get the most out of the money that you can afford in terms of putting it into your house. Part of that is figuring out what your bills are. It's called the debt-to-income ratio. There are two ways to look at it. They look at a ratio that looks at the income to your mortgage payment. And that's kind of an upfront figure. And then they look at the back end figure, which is all your bills plus your mortgage as a ratio to how much money you make. That's the debt to income. So if you're looking at ways to save money so you can spend more money on the house rather than on your bills, this is a way. I know that Hulu is $9 a month, and they have unbelievable new shows as well as streaming of all the existing shows. I think they've got NBC, CBS, ABC for your, broadcast fare, but they've also got, a number of other whether it's Prime or whether it's HBO or Stars or any of the Encore, any of these major not internet, but cable people or the satellite groups that, do original programming.
Well, it becomes more of a cafe of choices.
Exactly.
Yeah, so it's a la carte sort of, rather than just paying a base fee plus a prime and getting 100 channels, 90 of which you could care less about.
Exactly right. And that comes from the old cable mode. When we first got cable, and this is back in the 80s when they were wiring the country, they had tiers, right? Tier 1 was the cheapest. It included your local channels plus, 10 or 15 or 20, and they kept expanding it until all of a sudden it was one fee for everything. Now they're getting much more granularized in order to satisfy the customers, but also to drive the price down, unless you want a gazillion channels, and then your bill's going to be pretty hefty.
And then what they do, like the food channel has another channel called the cooking channel, and they show these programs on the food channel until you really like it. Then they move it to the cooking channel, which is on the next tier up. Right?
Okay, very good.
So they get their elite programs on the next tier, so you have to, pay the next price to get to the shows that they sort of hooked you into.
Yeah, and all this, the reason I'm bringing up bills is because, as I say, less DTI, more money you have in your income to afford into your mortgage. Now, an FHA mortgage, you can go up to about 55% debt-to-income ratio. On a conventional, it's less than 50%. But you can see that, if you're squeezing into getting into that property because rates are going up, you need to find every dollar you can find to be able to afford exactly what you want to be able to buy. Now, in San Bernardino and Riverside, these counties, this area, and I just talked to a guy today that was talking about programs out in this area, jumbo loans. And jumbo loans usually is the county limit if you're looking at a Fannie Mae or a Freddie Mac product. I think it's 676,500 is the conforming high balance loan. Anything beyond that is a jumbo, and those jumbo loans, of course, rates are higher than they would be on a conforming that they can sell to Fannie and Freddie. I can't even say that, Fannie and Freddie. So those type of loans, now there's a lot of properties under $600,000 in San Bernardino Riverside, but there are a lot of properties over $600,000. And finding the right interest rate on a $700,000 loan could save you thousands and thousands. So every dollar will help when you're trying to squeeze into that property that you've just found. And as I said, the inventory has gone up. So looking around as a buyer right now is a good thing. That YouTube address for me is Jeff Barton, real estate, what is it?
It's Jeff Barton - The Real Estate Show.
The Real Estate Show. Okay, very good. So even if you just look up my name, Jeff Barton, you'll see hundreds of shows there. Each week this show gets posted, and Daryl does a great job at doing that. I want to thank you for that. So if the information that you don't catch on the air, you can go to YouTube and see it. We have, like I say, KCAA, KMET will broadcast the show during the hour that it broadcasts, both locally and, again, they'll archive it for you. So there's a lot of different ways that you can see the show if you want to see the show. And if you want to listen to the show, we certainly do that too. On all those different outlets, you can just podcast it and then download it to your iPad or your phone. Let's see. We have a great show for you today. A couple of people coming on the show. Charles Giscombe, who's going to tell us a little bit about rates and what's going on with the market. I wanted to get into what Jerome Powell, the head of the Fed, said today about what's going on with the raising of rates. And we also have a great update on real estate out in Las Vegas, Nevada. I know there are many people in California who want to go there to retire. It's a great idea. Prices are extremely high here in California, but not so in Nevada. Although if you're a Nevadian, if that's even a word, you will not agree with that. But coming from California, where our average price in Orange County is over $1 million a property, that's a lot of dough. If you take and sell your house and you've got $500,000 equity, you can go out and buy a $400,000, 3, 4, 5 bedroom house on a quarter acre lot and live pretty fat with a couple $100,000 in the bank. That's a really good idea. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's the telephone number here. Pick up the phone and give us a call. We're going to help you with your mortgage today. We're going to help you try to decide what product you're going to use. If you need to get a low down payment, we can help you with that. High down payment, we can certainly get you a better rate and no private mortgage insurance. These things are things you got to think about right now because we are in a rate-rising environment. And I wanted to talk to Charles Giscombe from Malibu Funding. He's the qualified employee out there in Las Vegas for Malibu Funding about rates. What's happening with the rates, Chuck?
Oh, man, the rates. Obviously, the economy is doing really good, Jeff, man, because the rates keep going up. I think we had a third hike, and
Yep.
Jeff, we foresee some more coming. And that just means the economy is getting better, so people need to be prepared for that. I think there might be another one just before the end of the year.
Yeah, I think you're right.
Yeah, that's what it's looking like. So just be prepared for that. If there's anything that you need to do to lock yourself in, as long as the economy keeps growing, it's going to steadily increase. So you guys, if you can do some refinance, we got some high interest rate loans. You better get locked in right now. And Malibu Funding is here to help with all those needs, please.
Okay. Now, locally out there in Las Vegas, where you do a lot of your business, actually you do business everywhere, but let's just talk primarily about Las Vegas because we were thinking and talking off air as well as during our last segment, there's a migration when people sell their home in California or they're looking for a second home or a place to retire, automatically think of Las Vegas because it's just the housing's cheaper out there.
Absolutely.
So with this continued demand, I had somebody on the TV show yesterday telling me that somehow this is bad for Nevada, that there's this continued California presence always in demand, and it keeps housing prices higher than they would be if it was just local demand. What's your idea on that?
You know what? Having more people that have more income, that have money to come to Las Vegas can't be bad for Las Vegas. Obviously, the housing demand is going to go up.
Right.
You're looking at a place, that's built on individuals coming here. For a long time, a lot of people came to Las Vegas and left, but now you're getting people to come, and it's invigorating the economy in Las Vegas. So we invite that situation. Now, obviously, the housing demand it's helping the economy, but it's very competitive. And so at the end of the day, you have an issue as far as investors and things are concerned where that may cause an issue. But I can't possibly see with the Raiders and the different, and our new hockey team and
right.
the different things that are happening in Vegas and people coming to Vegas just because it's less expensive, get more home, that can be a negative. Somewhere down and at the end of all this, it's got to be a positive. Yeah.
Well, yeah, I think there's something to what you say. I think people coming and buying houses is always a good thing. I know that the federal figures on housing across the U.S. are not that great. Housing's really been in a slump for the past 3-4 months in terms of sales year over year. But the actual demand in Las Vegas is still pretty high because of the fact that it's Las Vegas and you can retire and get there and have a pretty exciting life or a life of leisure and pay a lot less than you can in a lot of the areas in Southern California. So I think that's a good thing too.
I think it's a great thing, Jeff.
Okay. Now I know you do a lot of loans for Malibu Funding that aren't necessarily fitting into the box of Fannie Mae, Freddie Mac, or Ginnie Mae. They're called the non-QM loans, and I think in this environment where rates are rising, where you still have some difficulty finding non-traditional buyers a loan, these type of loans are the ones that help, right?
Absolutely. What I've been finding more and more is non-QM are starting, they used to be considered like an underground loan, a loan that no one knew about, non-qualified mortgage, but now they're starting to surface. And now you'll get ads that are, that are selling the traditional loans, and the non-QM loans are right next to those loans in these ads, because there's a lot of people that make money, that want to purchase, want to transact, but they're not making their income traditionally. And when traditionally, I mean with tax returns, on a W-2, paycheck stubs, things of that nature. But these are entrepreneurs or different individuals that are, they have their business in their own hands, and they're making money, and they're transacting through their bank accounts. You can see that they're making a lot of money, but it's not the traditional documentation that we would utilize in order to qualify someone for a loan. So here comes the non-QM loan, introducing the non-QM loan, the non-qualified mortgage that will take those individuals who are still hardworking, still making money, and it will take what they do have, what is available, bank statements, different things, contracts, things of those natures that you can actually verify, and then use that as their income. And the beautiful thing about these situations is because they're not Dodd-Frank loans, some non-QMs abide by TRID, some you don't have to, just depending on what kind of occupancy issue you're dealing with. These loans are more treated as a commercial situation. But what happens is now you can bypass certain things in traditional loans that you didn't normally have to do. And that would be like mortgage insurance. So now you go through mortgage insurance. Yeah, you get a traditional loan. You can get a traditional loan. You put 5% down, and you put 3% down. But you got mortgage insurance. So at the end of the day, you got a low interest rate, a decent interest rate. In this market, it's a decent interest rate, not a low interest rate because they're increasing. Okay, but now you have mortgage insurance. Take that same loan on a non-QM situation, Jeff, side by side. I give you a higher interest rate. For example, let's just do hypothetically. I give you a 1%, 1.5% interest rate higher than that traditional loan. Okay, so now, of course, the interest rate is going to be higher. You think the person will be paying more. Not really, and it's a possibility that you're not going to be paying that much because the non-mortgage insurance with the non-QM loan may take off $500, $600, $700. So now you have a higher interest rate, same to, equal to, or maybe even lower monthly payment, and you're going, wow, how is that possible? That's because on a non-legally with no issue, these are great benefits for individuals, especially individuals who are running their own business, have their own corporation. These are all perks that tie in.
You mentioned the Raiders. You mentioned the Golden Knights. Both things, I think, when you're a city on the map, you have a sports team. You have, they had UNLV for the long time, but for the last, let's say, 15 years, they've been nothing in terms of sports scene outside of the WAC. But I think if the Raiders and the Golden Knights are any indication, the Las Vegas identity as a city is changing. What do you think?
I absolutely do. Jeff, it used to be, you come to Sin City, you drop your sins off, and you leave them here. You go.
Good way to put it.
So now people are in and out of Sin City,
Yeah.
But now it's becoming a place where people come to plant the seed. They're coming to reside. They're coming to create something, create their families here. Put some roots here. And so now with these sports teams here, those sports teams and these different things become an identity for the city.
I agree.
And what happens is it kind of gives it it's going to give it this is the thing. This is the city. Its identity is being formulated and created.
Yep.
And now when you get these different individuals, especially with the Raiders, because we know that Californians and the surrounding states have a true affinity for the Raiders.
Yeah, they do.
In Las Vegas, and now you can come to Las Vegas and become a Raider, be a Raider fan, and say, I live in Las Vegas where the Raiders are going to be. It gives you some sense of some culture, some history.
Yep.
It's a great thing for the city. And also, with the hockey team, oh, come on.
I know.
It's a great situation. That's also to have that fan base.
Chuck, we're up against it. Shout out your phone number for somebody who wants to talk to you about loans there in Vegas.
Hey, listen here, you guys. It's Charles Biscombe with Malibu Funding. I'm here. You can call me at any time. My number is 702-328-5191. Again, it's 702-328-5191. get me in contact anytime. And my office number as well is 707-939-LEND, which is 707-939-5360.
Chuck, thank you very much for coming on the show. I always appreciate your updates.
Jeff, I appreciate you having me and always willing to come, buddy. Thank you so much.
And thank you, too. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's the telephone number. If you pick up the phone and give us a call, we can help you with your mortgage decisions. There are decisions to be made. It's not just one call and all of a sudden you're rolling. You got to figure out what you need, what you have to borrow so that you can go out with your realtor and find a property that fits exactly what your financing is. You know, a lot of people have difficulty opening up about what their finances are, and I understand that. And there are a lot of people from many different places here in the Los Angeles, San Bernardino, Riverside, Ventura County, Orange County areas from all over the world, and there are different ways that people open up about who they are and what they are. Many cultures that arrive here and are 1, 2, third generation people have ideas about money, they have ideas about banks, they have ideas about the government, which aren't necessarily what you need to have in your head when you're going to go out there and try to get a mortgage. So if you are trying to get a mortgage, you have to be completely open and completely honest with either a lender or a mortgage broker or a bank or whoever it is that's trying to help you get the money you need to borrow in order to buy that house. Now, if you are currently looking for a house and you need to talk to a mortgage professional, you certainly can call me. I have a lot of people on my staff. There's about 50, 60 different loan officers that you can talk to. Malibu Funding is the company that I work for, and they're the sponsor for this show. Their NMLS number is 79620. And if you're in the market, go to their website, malibufunding.net. If you don't like any of those people, certainly the people that come on the show on a weekly, monthly, yearly basis, there are many of them, hundreds of them, and most of them don't work for Malibu Funding. So you can talk to any one of those. Go to the archives on YouTube or on any of the radio stations that we air the show on. You can find people. But I do suggest that you get out there, you look around, you find somebody that you can trust. The first and main thing you have to tell them is what you think your credit score is. And this is before they pull this credit score, right? You have to tell them honestly what you think your credit score is. You have to show them exactly how much money you make. You have to tell them how you're going to pay the loan back. And then you have to see if there's anything against you, either that's going to come up on your credit report. Maybe you have a lien against you, a tax lien from an old property. Maybe you were foreclosed upon back in 2008, 9, or 10. All of these things you need to open up to somebody. It's not about hiding. I remember back in the day in 2005, 6, it was standard procedure to try to hide debt from your loan officer. Tried to hide like there were scams out there. I call them scams now, but at the time, many people were doing it and doing it and being allowed to do it. That they would apply for one loan at the same time they're applying for another loan on 2 different properties. Now, normally in today's world, not normally, but all the time, you got to disclose that. I'm actively pursuing a loan for this property, even though it's a different loan that I'm pursuing for another property. Why do you have to disclose that now? Because it's part of your debt-to-income ratios. But back in the day, 2004, 5, and 6, maybe even a little bit later, you didn't disclose that because it doesn't show up in your credit for 30 days. Now, there are a number of different schemes that used to be okay to do that you can't do anymore. That just is flat out fraud. So if you're thinking along these lines of, hey, I don't have to disclose something, or I don't want to tell my loan officer something, the best bet is to just be honest and open up, because I can help you, your loan officer can help you, the bank can help you, the mortgage banker can help you, the broker can help you, only if you're willing to just be honest about where you are. It's quite possible that anything you think is horrible isn't horrible because of the way that you come into the loan with a certain mindset. Oh, I had a friend that told me I couldn't get a loan because I have a bankruptcy on my credit report 5 years ago. Well, yeah, you can get a loan because it's 4 years on your credit report, not 5. So if your friend didn't know that, they're talking you out of the loan before you even know whether you can get one. However, you do need to disclose that, because several things about what goes on in the mortgage world nowadays. A lot of the processes are automated. When you see the ad, and I always decry this ad, always say it's a lousy ad, the rocket mortgage model, right? And most lenders have that exact same technology. They just don't boast about it as if, you as a consumer can get online and get your own mortgage. But essentially, a lot of this information that you give to your loan officer and then is put into your loan application and into the process of doing a loan is automated. A lot of it is checked using programs. There are several programs out there. One of the ones that we use at Malibu Funding is called Loan Fraud. And what happens is the software checks for, 49 different items that you've put on your application, whether it's your social security number, your name, your address, your correct name, maybe some of the income, maybe the places you work, your credit score, your social security number, as I said. All of these things can be checked automatically within seconds. It was different 10 years ago. It wasn't as automated. And as we move further and further away from 2007 and 2008, and we get more into fully automated loans, what are we talking about? We're talking about technology being used to be able to check and verify information on your loan. Now, I ran across this website the other day, and it said fraudulentloandocuments.com. I am not kidding you. I don't know if it's still there, but I was amazed. So I called my local regulator and told him about it. But this was a website set up for people to try to defraud the lender on getting a loan. Now, I don't mean to sound like that's the dumbest thing I've ever seen, but obviously this is getting traction. I think it was $40 to get like W-2s printed up as if it was from some company. And I'm thinking, what? W-2s? Okay, so W-2s, income, that's what you use in terms of figuring out what your debt-to-income ratio is. And this is what we've been talking about this show. How much can you borrow? What is your income? How much money do you owe? That's your debt-to-income ratio. And it's the lower your debt-to-income ratios, the higher amount of money that you can borrow. And so when people come to the table with fraudulent documentation through this website, I'm like, well, anyway. Those things are not good, shouldn't be done, and I'm telling you now, just so that if you're thinking about it or you're out there, you're from a different culture, you're not really aware of what goes on in the mortgage industry and how sophisticated it has become in terms of both the checking of the information and the automated responses to most issues that come up as red flags on the application. These are handled so quickly nowadays. If I was to put in a particular loan, and there were issues on any of these things, it would come back as a red flag within an hour, maybe even less. Probably an hour, because it takes an hour for the person who actually has to call you to pick up the phone and call you. But it's so fast. So I guess what I'm trying to say here is be open with your loan officer, your bank, your mortgage banker, whoever you're trying to use in order to help you. We're all in this to help each other, right? If I help you get a mortgage, you're helping me by getting me paid. This is like a win-win for me. I mean, there's no payment unless I can get somebody a loan. And there's no house unless you can provide the correct documentation. Providing documentation that's verified easily is about this process of trusting the loan officer, the bank, the lender, whoever you're going to use in order to help you, as I said, get what you want. And mostly when we're dealing in a large area, like if you include San Bernardino, Riverside, Los Angeles, Orange County, and Ventura counties, you're probably talking 15 to 20 million people. That's a lot of people. And you're probably dealing with 200 different nationalities in these areas. That's a lot of different cultures to bring together to try to understand why this works this way in the U.S. And so if you don't trust, yeah, I get it. I understand it. But how it works here is you need to be able to trust. You need to be able to open up to your loan officer to tell them everything that's positive about who you are and certainly everything that's not positive about who you are. Because a well-informed loan officer, a well-informed loan, a well-made application, nothing that sends red flags is an easier, quicker way to get your loan. It may not be the most money that you can borrow, but you would be best served, obviously, by providing that as quickly and I guess as thoroughly as possible, because nobody gets paid unless the loan closes. So we're all in the business of trying to help you, even in situations where you might not think you can get the loan, you might be able to. We had Charles Giscombe talking about non-QM loans. There's all kinds of avenues today to get a loan. Just open up, be honest, and help your loan officer. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's our telephone number. Please pick up the phone, give us a call, and we can talk to you about your mortgage. There are a lot of things that you got to consider when you're out there looking for houses. The main thing I would believe is, how much can I afford? Where am I going to live? I know the feeling. Believe me, there's tons and tons of people out there who are freaking because the rates are rising. Don't. We can find something that fits your budget and also locate some property with your terrific real estate agent that you're working for. We bring to the show those type of people all the time. And since today is a lot about Las Vegas, we decided to bring an expert in Las Vegas real estate, somebody who knows the market as well as a lot of different things that she does out there. Janti Chun from the Realty One Group. Janti, how are you?
Very good, Jeff. Thank you for having me on the show.
Thank you very much for being on the show. So, introductions aside, how are you and how are things in Las Vegas?
I am terrific.
Okay.
As an agent, I cannot complain. I've been very, very busy, on both sides, actually,
Okay.
in Las Vegas. I started out as a buyer's agent many, many years ago, about 13 years ago as a real estate agent, and now, because of the market, I've kind of flipped to being a seller, but I still represent both. The market is hot, just like Vegas.
Yeah.
And
I was out there yesterday. The weather was hot.
yeah, well, it's still kind of warm. We're talking about high 90s,
Yeah, that's
low
hot.
hundreds still.
Yeah.
So the market is great. We're still seeing an increase every year. Average is about 13%,
Right.
up to 20% in certain areas. And we don't see a bubble or a bust anytime soon. Right now, our supply, we're looking at about 2 months supply. So it's gotten a little bit better from the last couple of months.
Right.
We were only at about a month and a half, so now we're at about 2 months roughly. And like I mentioned before, a stable market, you're looking at about 6-7 months supply, right, for a stable, a
Sure.
really good market. Yeah, so we're at about 2 months. Prices aren't crazy, we are educating the sellers basically to not go crazy just because the market is, there's not a lot of inventory or properties.
It's
For them
still
not to ask.
It still hasn't crested that 316 mark, which it was in 2007, right? We're around 290 in terms of the median price.
Yeah, the median price is right about there, between 290 and 315 roughly.
Okay. Okay.
So it climbed. I think it increased just a little bit.
Now, this
within the last few
particular,
months.
our particular show, we reached San Bernardino and Riverside, which are, of course, just a hop, skip, and a jump from Vegas. And we get a lot of people that go on that 15 and cruise into Vegas for all kinds of reasons. The opportunity there, either to make money or to live, is pretty high. I know you've done some house flipping yourself. Tell us a little bit about that market.
The flipping?
Yes.
Oh, as an investor.
Yes.
Oh, well, it has. It's very soft right now as an investor because as an investor, you want to find some great deals, right? And the
Right.
great deals back in the old days were short sales and foreclosures. And now in this market in Las Vegas, I mean, we're looking at less than 100 foreclosures, maybe total.
Wow.
And even in a trustee sale, and which they have it weekly, sometimes twice a week, but now it's more weekly, only because every time there's a trustee sale, there's only maybe about 10 to 20 properties, as compared to, 50, 60 before.
Wow.
At, to 100 maybe, but now it's really soft. So as an investor, now I still do investing, so I'm kind of going a little bit further out than I used to.
Where?
To be able to...
Pahrump? Yeah.
Pahrump is one of them,
Yeah.
Sandy Valley. I'm going kind of on the outskirts now of Las Vegas,
Right.
Because within Las Vegas, the price is a little bit higher now. If you have, $500,000, $1 million, basically, to invest in each property, you can still find some decent stuff. There's still some distressed homes here and there, but as an investor, it is a lot tougher right now.
Now, we had a guy on the TV show yesterday that was talking about building and new home development in Las Vegas. Do you see a lot of that happening out there?
Yes, absolutely. I mean, last year, I think there was the most permits pulled for building. Yes, even more so than during the peak, to my recollection. So, yes, there is a lot of building, but the inventory is still not there, right? Because it takes 3 to 6 months to build.
That's exactly right. And I don't know if they're building on spec or they're only building on contract. Do you know that?
I'm not sure
right.
on that one.
Okay.
Yeah.
Okay,
I
so
guess it depends.
I was looking at some new houses online, and I saw one that, because I like cheap and I like small. So, why do you laugh? Okay, so anyway, I think it was $172,000, or maybe less, a little less, you could buy a brand new 1,250 square foot house. Does that seem reasonable?
Well, yeah, that sounds about right now.
Right.
Around 900 to 1,200 square feet, basically. The average price would be around the 160 to 200,000.
Right.
Yeah, we're looking at what, 150, 160, 170 per square foot.
Yeah, exactly. And where would those be? Southwest, northeast? Where are those being built?
Yeah, the two areas that we see a great influx or a great increase, or the first to increase would be Henderson and Summerlin, right?
Yeah.
So those are the more, I guess, not expensive, but not as affordable areas, basically, because they're newer and you have newer developments, and then of course that's where the builders are building as well.
Okay, which I like, and I flew into Las Vegas yesterday. There's this new airline that's sprung up, which is kind of private. You get to skip all the I guess the security, the lines. Right, there's only like 30 people on the plane. It's a little bit more expensive, but it also flies into the two other airports in town, either North Las Vegas or down near Henderson. I kind of like that airport near Henderson because, if you live there, you just jump off a plane and you're at home, which is really nice.
Well, Jeff, I mean, you're doing private. I mean,
no, this was a regular. No, and it's not private. Now, wait a second here. It's not private.
I'm aspired to be to your level, Jeff.
No, well, speaking of that, you've been traveling yourself recently. Yes, I know you have.
Yes, I go to Europe at least once a year or twice a year, and I stay for about a month or so.
It's great, and I think the European way of doing vacation is much better than the American way, where you get a week here, a week there. In Europe, of course, it's 4 to 8 weeks, or 4 weeks definitely, and you just travel and enjoy yourself. I always thought that was a better way to rejuvenate and recharge. So. When you're traveling, where do you like to go first off when you get to the continent?
Where do I go in Europe?
Yeah. Did you like that? No, I said continent. Like I know what I'm talking about.
It's continent. Yeah, there's many continents.
Yeah, well, no, there's not many. There's only 5. Okay, so.
Well, yeah, oh God, I love
7 continents.
I love all of Europe, right? So I try to hit as much as possible, basically. So when I'm there, that's why I stay for about a month or two, so I can hit like all the countries, because it's so close and so easy to travel from one country to another in Europe.
Yes, it is.
Yes, and I was looking at real estate over there too, but we'll talk about that next time.
Oh, very interesting. Okay, so where do you see the market heading after January? I know we're in a little bit of a slowdown right now, and the inventory is rising a little bit, and there's a lot less sales transactions this month than there were this time last year. Where do you think it's going to go in January?
I hear mixed reviews, and what I kind of heard from the other side is 2019.
Yep.
We are going to see a little bit more supply, right?
Okay. Yeah.
So that and also where the prices is going to start kind of leveling out. I mean, I guess to some degree, we're seeing a little bit of that now.
Yes, we are. I agree.
Yeah, so where it's not going crazy, it's not stagnant. We don't want to say that, but it's definitely not increasing. The way that
it has
history
been.
shows us, right?
Yeah. No, I agree.
Yeah.
No, I like
more supply.
Go on. Go on. I'm sorry.
Yeah, definitely more supply in 2019, I believe.
Okay, that's good news. Listen, could you shout out your phone number in case somebody needs a terrific real estate agent out in Las Vegas?
Absolutely. My number is 702-467-3131, and that's Jean Chun.
Thank you very much.
Online, I'm everywhere.
You are. You know what? We're going to Google you right now. No, actually, I'm not. I've got another interview. But I really appreciate you once again coming on the show. I look forward to you coming on the TV show as well next time I'm out in Vegas doing the show.
Absolutely. Thank you so much, Jeff.
Thanks, John T. And you do very much. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's the telephone number. If you pick up the phone and give us a call, we can help you get your mortgage. We can help you decide, help you figure it out, help you make decisions that you quite possibly can't make on your own. Do you know how much money you can borrow? I bet you don't. Do you know where you want to live? Maybe. Do you know that the best strategy out there right now is to wait a little bit? Yeah. I'm saying it. I know my livelihood depends on you all going out there and buying things so that I can do a loan so that you guys can pay me on the commission. But if you're looking around for a house right now, we have a growing inventory. It's not fast growing, but it is growing. What that means is properties are sitting longer on the market. If properties sit longer on the market, and usually it takes, this is seller's world I'm talking about now, not buyer's world. Seller's world, it takes 3 to 6 months for a seller to understand that their property is priced too high. Now, in a market that we have whereby the buyers are increasing and the number of days on market is increasing, and you've got a property that you want to buy but not at that price, it's going to take you 90 to 120 days before the seller realizes that the property is priced too high. Now, if they have a good real estate agent, or if your real estate agent is smart enough, they can say, look, we're interested in this property, it's priced too high. I know that it's going to take you some time to understand that, but I've got an offer for you right now. You can sit on it for 60 days and wait. If you don't get your price in 60 days, I want you to sell me at this price. Now, that's a negotiation that isn't often done, but it can be done if you've got somebody that is understanding of the marketplace. Now, right now, we are seeing houses sit probably 90 days or under. If we get to 90 days or more, that strategy will really be a good strategy to employ. Now, I know as a buyer, you don't want to sit around, you don't want to wait, and you want to get into a place today. You've got holidays coming up, and you just don't want to wait. You want to get you and your lovely, or you and your kids, or just you into a property. I understand that. But strategies being what they are, and real estate being the beast it is, you have to wait for the right moment to buy something. And then when you are ready to buy, you have to be qualified to buy. So knowing what you can buy, by how much you can borrow, is the essential piece of the equation. Finding the property you want, placing a good offer in, placing a wait offer in, however it is that your real estate agent decides is the best way. Now, I know realtors. I'm a realtor, been a realtor for a long, long time. And I know realtors do not want to spend time with someone who does not want to buy right now. You need to find a new realtor. You need to find somebody who's being patient with you. Now, you may not want to go out and see 50 houses a week if you're not willing to buy because I'm telling you to wait, But if you have a patient realtor who understands the marketplace, they can put you on a drip campaign so that you can see what's happening in the MLS. Or if you've got that perfect property picked out and you're just waiting for the seller to drop price a little bit, yeah, you can place an offer based on that and based on the fact that you will wait X amount of days for the property to be sold at the price you want to buy it at if the seller needs to wait. All of those are available for you if you have a good agent who is patient. Earlier this year, I had 14 different escrows with one particular buyer. Now, I want to tell you, I don't want to do that again. However, being patient and understanding the buyer's needs. This was a first-time buyer. This was a nervous buyer. This was a buyer who we got into 4 different inspection periods after we got into escrow. We got out of the escrows on the other ones for different reasons, but for these particular properties, 4 of them, we got in home inspections done. Now, one thing about the home inspection that I've got to tell you is it says in the contract, although nobody reads the contract or remembers the clauses if they're buyers, they don't. It says that you must be reasonable. You must expect reasonableness from the seller. Not everything or not nothing. Although the seller doesn't have to fix anything. So with this particular buyer, on 4 of these properties, there were problems with the houses. In certain markets in where I am doing my business for real estate, the roofs aren't great. Now, maybe where you are out in San Bernardino and Riverside, you've got other issues. Maybe you've got some erosion issues because last year's rain really took the wall down behind your house that was really propped up against a hill. Well, the hill disappeared because of the rain, and now the wall's not in a very good shape. You got kids, and you don't want an earthquake to, have the wall land on them, so you want to have that particular aspect of the house fixed before you move in, if you're the buyer. If you're the seller, you want to look at that wall and say, either I got to remove it or I got to fix it. But in all of these cases with this particular buyer, they were nervous about something that went on with the property. Now, there are many good agents out there who can foresee this. Me, I wasn't the greatest agent because I couldn't solve problems either with monetary, enticements from the seller or by a wait and hold or some kind of credit that we could get from either the lender or both agents. So it didn't work. But I understand patience with buyers. And if you're a buyer out there and you've got a real estate agent that's pushing you into 1, 2, 3 property choices, yes, that is a sales strategy. And being in real estate feels sometimes like you're selling used cars. And really what you want to do is be a consultant, somebody who can guide a buyer, especially a first-time buyer, somebody who's nervous, somebody who's between 35 and 25 to 35 years old, who's nervous, who hasn't done this before, who doesn't want to be hustled or pushed. I understand those type of people. But if you've got a real estate agent out there and they're that kind of patience, most real estate agents are, because they really understand it. Most real estate agents are homeowners or have done some investing, really understand the process of buying a home for the first time. So they're willing to hold your hand. They're willing to take the time. If you don't have that type of person, there's tons of them, and I can turn you on to many. Some work at my company and a lot don't. But in those areas where we can help you, we can help you by directing you to terrific people, terrific agents. A couple things in the news to use section of the show. Mortgage rates hit a 7.5-year high as the easy money era comes to a close. Now, we talked about this on the show already. Rates have gone up, okay? The Fed is going to raise the rate probably one more time, and that's according to both what I read and what Charles Giscombe told me on the show earlier in the show. Rates rising at the Fed level doesn't necessarily affect the bond market, which is what the mortgage rates go by, but it does set a precedent in the mind of the public as to where rates are going. The Fed rate adjustment affects your credit card. It affects short-term loan, your car loan, things other than what the mortgage rates are. The mortgage rates are tied to bond. Bonds are really debt, right? I mean, the government sells debt all the time. On 10-year treasuries, okay, when you hear that term, it's the government saying, we cannot fund the government unless we sell this debt, i.e., I will sell you a bond and I will pay you off in 10 years and give you 2.5% return on your money. Let's say it's 2.5%. Well, when the government can't sell those bonds, they have to give a higher yield. So instead of 2.5%, they got to sell it at 3%. Well, when that happens, that drives the mortgage rates up, because there's only one way to recoup that type of bond yield, and that's to make sure that the mortgage-backed securities that Fannie Mae and Freddie Mac sell are at a higher premium, so mortgage rates go up. So when they look to try to fix what's going on in the housing market, they look to two things, right? They look at both the rate and the yield on Treasury T-bills, the 10-year note, because that affects the mortgage rate. And then they look at long-term rates when the 30-year. Now, a lot of the 30 years don't exist anymore. They really don't push the 30 years because that's a long time to push debt off into the future. Anyway, that's what's happening with Jerome Powell. Let's see what he's doing. He's saying that, okay, we got less than a minute. So Jerome Powell is the head of the Fed, right? He came out at the recent Federal Open Market Committee meeting, and he said that the Fed, which has for the last 10 years told us what is going to be happening through their minutes of the meeting, he said that he's not going to do that anymore. He's not going to tip his hand to the markets. Usually that's trying to calm the markets. We're not going to raise rates. We see a flat rising of rates. We see a modest rising of rates. This is what's in the minutes. So what happens, that builds into the stock market or into the mortgage-backed securities or into the bond sales. That tells the markets to be calm. This is what we're going to do, or we're going to raise rates. Well, they're not going to tell you anymore, and that's what the main event that came out of the Federal Open Market Committee meeting was. It's interesting that they went to, instead of being a biased in terms of their forecast, they're not giving any indication. That's not good, in my opinion, but according to the Fed, it is good. Wait to be seen and wait to hear what's going to happen in the future with that. I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks for listening to the show. Thanks for tuning in, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.